Investors, hello! This is Stock AI Insights Earnings Analysis, and I'm your Chief AI Analyst. Just a reminder, this is for educational reference only and not investment advice, because all investing involves risk. Today we are diving into Li Auto's Q3 earnings, which dropped on November 26, 2025. And let me tell you, this was a quarter of two extremes. We've got some really tough financial results sitting right next to one of the most ambitious strategic pivots I think I've ever seen from a major automaker. Okay, let's just rip the Band-Aid off and start with the one number that really tells the story. Li Auto's vehicle deliveries absolutely plummeted, down 39% from this time last year. You know, this single data point is pretty much the earthquake that sent shockwaves through the rest of their financial report. So let's unpack that delivery number a bit more and see exactly how it hit the company's revenue. This first part is all about the tough reality they're facing right now in the market, and believe me, the numbers are pretty stark. Now, have a look at this chart. It really puts that drop into perspective, doesn't it? A year ago, in Q3, Li Auto was shipping over 152,000 cars. This year, that number fell all the way down to just over 93,000. That's a gap of almost 60,000 vehicles. It's a huge sign of the intense competition and headwinds they're up against. And of course, when your deliveries fall off a cliff, your revenue follows right behind. Fewer cars sold simply means less money coming in the door. That dragged their total revenues down by a massive 36.2% year over year. The key thing to remember here is just how much pressure the company was under from the top line this quarter. All right, so when revenue drops that hard, the very next question you have to ask is, what on earth happened to their profits? And as we're about to see, the pressure on the bottom line was just as intense. Okay, look at this table. It tells a very clear story of what we call margin compression. Their vehicle margin, that's the profit they make on each individual car, it fell by over 5 percentage points. And their overall gross margin took a very similar hit. So this isn't just about selling fewer cars, it's about making less profit on every single car they did sell. So what caused that squeeze? Well, the company was actually very specific about it. In the earnings release, the CFO, Tai Li, pointed a finger directly at the costs related to the recall of Li Mega as a major reason their margins got hit so hard. And here is where it all comes crashing down to the bottom line. You take the lower sales, you combine it with those squeezed margins, and the company completely flipped from a really healthy 2.8 billion RMB profit last year to a net loss of over 624 million this quarter. That is a stunning and, frankly, painful reversal. So was Q3 just a temporary setback, or does the company think this pain is going to stick around? To figure that out, we've got to look at their official guidance for the fourth quarter. Well, the company's own forecast suggests these challenges are definitely not over yet. They are guiding for another pretty big year-over-year drop in both deliveries and revenue for Q4. That's a clear signal that they expect these tough market conditions to continue right through to the end of the year. Okay, so we have laid out the harsh reality of the numbers, but what comes next is what I think is the most interesting part of this whole story. This is where we pivot from a really difficult quarter to a radical new vision for the entire company. You know, the CFO's comment about intensifying market competition really sets the stage perfectly. It's basically an admission that when the environment gets this tough, you can't just make small changes. It forces you to completely rethink your entire strategy for how you're going to survive and grow. Which brings us to the absolute critical question. With sales down, profits gone, and the competition breathing down their neck, how exactly does Li Auto plan to fight back and actually win in the long run? Well, the answer from their CEO, Shang Li, was not what anyone expected. Instead of talking about small adjustments, the CEO laid out 3 massive strategic choices. First, he wants to ditch the typical corporate management style and go back to a more agile, founder-led entrepreneurial model. Second, and this is the huge one, he wants to redefine their cars not as vehicles, but as embodied AI robots. And third, to make that happen, they're going to build the entire AI technology stack themselves, in-house. So what in the world does embodied AI even mean here? Well, the core idea is to turn a car into an intelligent robot that can actually understand and interact with the physical world around it. Think of it less as a machine you drive and more like a partner that serves you, anticipates what you need, and just happens to be shaped like a car. This whole shift is a direct shot at what the CEO sees as a pretty boring market right now. He called the current EV competition an arms race in a spreadsheet, just companies fighting over a little more range or a slightly lower price. His new vision is about creating automated and proactive services that are so useful, you'll feel like you can't live without them. And to make this super high-tech concept easy to understand, the CEO used this brilliant metaphor. He literally said, in layman's terms, robots. He told everyone to think about Transformers or Kit from Nightrider or the characters from the movie Cars. His vision is to build real-life versions of those things, intelligent robots in the shape of a car. It's an incredibly bold, almost sci-fi pitch. Okay, so we've seen the weak financials on one side, and we've heard this incredibly ambitious long-term vision on the other. How do we square these two completely different narratives? What's the final takeaway here? Here's the verdict. Li Auto is facing a severe short-term crisis with its sales and profits, but it's responding with a truly radical, long-term pivot to redefine itself as an AI robotics company, not just another car maker. This leaves us with one massive question. Can a visionary 10-year AI strategy convince everyone to look past the really harsh market realities of today? I'd love to hear your thoughts in the comments. See you next time.